The Federal Reserve announced a much-anticipated interest rate increase.
All right, here to explain what this means for your money, our money, financial and business analyst Brent Wilsey. Brent, good morning. Always good to see you.
Good morning. Thanks for having me.
All right, these Fed hikes, they're going to affect your mortgage, your car loans, your credit cards, all of it. When I read this, I said, okay, what's going up? Let's start with the mortgage rates. Are those going to get higher?
They will go higher, and this is just the beginning. We'll probably have 3 to 4 rate hikes total this year. So you could see mortgage rates up as much as 1 percentage point by the end of 2017 here.
Oh, so for this year, you think it's going to go up that much?
Yes.
Okay. What about if you're in the middle right now of trying to buy a house? What's going to happen?
Well, here's what's actually going to happen. We're going to see a big push to buy houses now, because now with rates rising, everybody's fearful, like, oh my gosh, I better get in a house now because it's going to cost me more next year. So we're going to have a big push for buying houses, and I think we're going to have a big demand, which will push prices up. So if you're in the middle of doing that, you got to get going, get that paperwork done, and get things in.
So demand will go up, prices will go up in the short term. What about long term, a couple of years down the line?
It's going to continue. We have a very solid foundation for the economy growing. It's going to continue for probably at least 2-3 years. We have a home builder in our portfolio, and they talk about how they have this major backlog of homes, demand for homes. Big problem is they can't find labor to build these homes.
Let's talk about some of the other loans, Brent, that people will notice a change in. We're talking car loans as well. What's going to happen with those?
They'll go up, not quite as much. There's a little bit of absorption there, but we will see car loans and leases increase as well.
And I'm sorry, what was the second part?
Leases.
Leases.
When you lease a car,
okay.
right.
Okay. And then what about the stock market? We watch that every single day doing its thing. What's in store for investors?
Well, because of the growth of the economy, stock market will be okay. You may have a little decline initially when rates go up. Didn't happen yesterday. It's not happening today. But the stock market will be fine until we get rates around 4 or 5, maybe even 6%. So the stock market's okay for, I'd say, for another 2-3 years. We got a strong economy. Business is doing well. So the stock market still is a great place to invest as long as you invest in the right companies. Be very careful. A lot of overpriced companies out there, though.
Right. You see the Dow is up about 33 now. Do you think raising the Fed rate, is this an attempt to slow economic growth? I thought we're trying to go in the other direction.
Well, they're concerned about inflation, because if you let this go too long, then you have runaway inflation. You got a big problem of rising prices, and we do have a tight labor market, which means that wages could go up, which causes inflation as well. So they're doing the right thing by starting now to prevent big problems down the road.
How does something like this compare to what we're hearing the president talk about? He wants to speed economic growth. He wants to have more of that. And then we hear this. So it's confusing to the layman.
Right. It is confusing, and President Trump does want to have more economic growth. This is kind of difficult for him because of the rising rates. Another thing happens is it will increase the cost of our exports and decrease the cost of imports. So we'll be importing more, exporting less, which does actually hurt the economy.
There's a lot in flux right now, I think is what we're all getting from this. Brent Wilsey, we thank you for your time and your expertise as well.
You're welcome.